Hello guys, and welcome back to my YouTube channel. And this video we're going to be going over a trade breakdown, a trade recap of one of the trades I took this week, what played out, how I was able to get involved with the trade, manage the position, and take advantage of the moves. It's actually one of the trades I called out on Sunday in the weekly outlook. So if you've been following my weekly outlook videos, probably might have seen or have been able to catch that position as well. So one more thing, don't mind my voice if it's a little bit cracky or shaky. It's currently almost 3 a.m. I just have to put out this video because I've been scheduling all my videos and trying to have everything I'm doing like in a schedule, and if I'm not able to get out this video today, I don't think I'll be able to get it out in time. So this is the time for it, and we're just going to power through and I'm going to be breaking down this chart. So without any further ado, let's get into the charts. So the pair we're going to be breaking down is Eurocad, Euro Canadian dollar. And if you, like I said, if you watch the weekly outlook video on Sunday, I clearly explained everything I was looking for on this pair. But let's break it down. Let's break it down right now. If you go over on the higher time frame, if you've been following my channel, you know by now that I use the top-down analysis where I start off on the higher time frame and work my way down to the lower time frame where I pick my entries. Okay, so if you go over to the higher time frame, let's start off on the monthly time frame just for explanation sake. You could see that this market has been trapped in this, in between these highs and these lows for quite a while. Since December of 2022, the market has been trapped in between this high and this low. So this is a very strong area of resistance and a very strong area of support. And this market managed to break through this level last month, the month of July. Okay, take it down to the weekly time frame. You can see this range is also evident over here, these lows and these highs. The market has been playing in between this level for quite a while. Now the market broke out of this level over here, and at the time I was making this call last week Sunday, the market was actually testing this level again. Okay, so let me take it down to the daily time frame so you see what I'm talking about. You can see on the daily time frame, this is the same range where I've been seeing on the weekly and the monthly time frame, the lows, the highs, and the market was trapped in this level for a pretty long time. The market broke above the level bullishly. You can see, let me take my path to low, high, higher low, higher high, higher low, higher high, higher low, higher high. And the market pulled back into this level, and this was where we were tracking this market last week. Okay, the market was exactly at this point last week, and I said that I'll be looking to see if the market was going to be able to give us a double bottom formation, an engulfing candlestick. If you can go back to a Sunday video and watch it, you see I clearly stated that. So let's go over to the 4-hour time frame to see how I was able to get involved with this market. So before we move over to the 4-hour time frame, you can clearly see the trend is up. Weekly, daily, the trend is up. The market had broken above all these areas of previous resistance, cleared it, pulled back into them, and held as an area of value. So let's take it down to the 4-hour time frame to see how I picked my entry. So on the 4-hour time frame, you remember I said I was waiting for a double bottom. Come and see how this market formed very cleanly here. Market push down, one bottom, push up, push down, second bottom, engulfing. As clean as it can be. As clean as it can be. Now, to be honest, the previous week I was trying to force an entry over here. Off of this 1 hour time frame. I was trying to, this left head, right shoulder, I got in somewhere here, stop loss underneath this level. And as this big red candle was forming, I jumped out of that trade. But I was really confident that this level was going to provide us support. And after, trying to catch it early over here, I was patiently waiting to see all my confluences, come to play before I, press the buy button. Okay. So immediately this market made this first bottom push up, second bottom, I was patiently waiting to see how this candlestick would close. Immediately it closed as a bullish engulfing. This was my candlestick confirmation. Everything I needed to see was already here. Now, granted, the EMA was above the price action, which, typically it would have been better if the EMA was over here, like below the double bottom, or just hugging the price. But like I told you guys, like I explained on my EMA when I did the lesson on EMAs, I don't really take decisions solely based off EMA. I use it only as a confluence. And as I've seen that the area of value was holding, the market had pulled back, giving me my entry confirmation, giving me my chart pattern. I took my entry over here, stop loss below, target above. You guys know I take my ideal profit target is 1 to 3, but I was able to get a 3.31 risk to reward because this was my initial stop loss and my initial entry was meant to be here, but the market pushed down and this was where I executed my trade. So that was why I had an extra 3.31 instead of just a 1 to 3. So yeah, this was basically the trade. What can you take away from this trade? Everything I've been explaining, this is like a practical example of everything I've been explaining. 1, trend. Always look for a market that is in trend. First, the market has to be in trend. Secondly, wait for the market to pull back to an area of value. Area of value, you can see I picked off the daily time frame. You can see I did all my analysis from the higher time frame, but my area of value, I went over to the daily time frame to fine tune my area. And you can see higher low, higher high, higher low. This was a clear level of previous resistance, and I waited for the market to pull back into this level. And on the 4-hour time frame, I waited for my chart pattern. Now, I'm just going to say this: you don't always need to wait for the chart pattern solely on the 4-hour time frame. But for this trade in particular, this was where I was able to pick my entry on the 4-hour time frame, waited for my chart pattern, and most importantly, my entry confirmation, which is the bullish engulfing. I cannot stress enough how important the bullish engulfing is to my entries. This is like the bread and butter to every trade I take. You almost always see me wait for an engulfing candlestick before I take a buy or sell in the market. So this was basically the trade I took. Very clean, very simple. It's something you can catch if you just follow these simple rules. And this is the full breakdown of how I was able to catch this beautiful move, this 95 pip move on EuroCAD. So thanks guys, thanks for watching. Be sure to like, comment and subscribe. Share the video with your friends and family. Like I said, I'm going to be coming up with more videos like this, more trade breakdowns, so I could be able to explain the thought process and not just leave you guys with the theory, but when I take these trades, I'm going to try to show you guys more practical examples so you know how to go about it and not just hearing about, oh, this is what you do, this is what you do. I'm going to be basically showing you guys, how I also approach the market, so you guys can learn from it as well. So once again, thanks for hanging out with me today. I'll catch you guys in the very next video. Bye for now.